Wunderschönen guten Tag, meine Damen und Herren. Siebte deutsche Rohstoffnacht und wir haben ein Zusatz-Goodie für Sie. Wir haben heute Bradford Cooke hier, den Co-Gründer und CEO von Endeavour Silver, aber er wird nicht in seiner Eigenschaft als CEO von Endeavour sprechen, sondern als Vizepräsident des Silber-Instituts und wird uns dadurch einen tiefen Einblick in die Silbermärkte geben. Brad, very warm welcome here from Switzerland and great to have you here for the 7th German Resource Night. How are you?
I'm good and wonderful to be back.
Super, thank you very much. So I just told the audience that you are also the vice president of the Silver Institute, and we want to talk now about silver, and you have prepared a very interesting presentation about silver, and I will start that in now. Voila. And I would say the floor is yours.
Thank you very much, Jochen, and welcome everybody to the Silver Update at Rohstoffnacht. I would like to give credit to the Silver Institute and Metals Focus for providing many of the slides that you will see today. So without further ado, let's talk about silver. Silver, as we all know, is a monetary metal, a precious metal. Like gold, it's money, a store of value and a hedge against monetary debasement. It's been used for thousands of years as bars, coins, jewelry, and silverware. But silver in recent decades has also become a very strategic industrial metal because it's the best known natural conductor of electricity and heat. It has many, many different uses, primarily electronics and batteries, alloys and LED chips, etc. But something people may not be fully aware of or appreciate is that silver more and more is becoming a green metal. It is a critical component of solar photovoltaic cells, electric vehicles, and 5G cellular technology. So, we know from the monetary thesis that wherever gold goes, silver follows, and gold's already in a secular bull market. But silver typically lags behind gold because of its industrial component. And then when the investors finally wake up to silver, it outperforms gold, typically in a bull market. So where are we today? Well, we understand that gold is a store of value and a hedge against depreciation. The chart upper left simply shows every fiat currency in the last 100 years and its purchasing power versus gold. And as you can see, 100% of fiat currencies in the last 100 years have depreciated, almost 90-95% versus gold. On the right-hand side is the up-to-date S&P chart versus the Federal Reserve balance sheet in the US. And you can see the dotted line that the balance sheet has spiked up, obviously, due to the current COVID-19 crisis. What does that tell us? That we're going to suffer from depreciation of fiat currencies in the following years. So the last quote on this slide is from JP Morgan. It's one of my favorite quotes. Gold and silver are money. Everything else, it's just credit.
And that's really true.
Now, people have been asking me in March, what's wrong with gold? Everything is getting sold off. But in a market panic, everything does get sold off because there's a rush by investors to cash. But look at what happened to gold after the March panic. Not only did it recover 100% of what it lost in the panic, but it's resumed the previous uptrend here in April. And it's clear that we've resumed the cyclic bull market, driven primarily by the low and falling interest rates and the massive and growing quantitative easing by central banks worldwide, which I think should drive gold prices to new all-time high prices. Silver is also a hedge against debasement. Currency debasement is nothing new. The Romans dominated world trade with the denarius silver coin. The chart below shows the percentage of silver in the 4-gram denarius coin from around 65 BC to about 260 AD when the Roman Empire came to an end. And as you can see, the denarius coin is the first example I could find of government debasement of fiat currency. They ran out of silver over time and they replaced it with bronze. And as a result, by the end of the Roman Empire, nobody wanted the Roman denarius coin because it didn't have much silver in it. People also ask me what's wrong with silver. But you know what? We know it lags gold. Historically, has always lagged gold, and then it plays catch up in a hurry. So silver lagging gold is as expected. It hasn't even recovered what it lost in the market panic. But fear not. because I do feel that history will play out yet again. And of course, the main reason why silver lags gold is that it's not just a monetary metal, it's an industrial metal. And the performance of the industrial commodities, not only coming out of the panic, but now probably for the rest of the year, with the global economy effectively in lockup and only slowly will it recover, that's the lag on silver. But as the economy recovers, as it surely will, then silver will once again catch up to gold. So if we look at what that does to the gold-silver ratio, obviously it reached a record high on March 19th, and at 125, by the way. It's only come back to around 110 to 115, so it's come off the top, which is a good sign, but we're just barely starting the silver cycle. And yet we know that silver typically outperforms gold in a bull market. This is simply the last bull market from 2008 to 2012. And you can see on a relative performance basis how much better silver did relative to gold. So let's look now at the fundamentals for silver, and this is courtesy of the Silver Institute and Metals Focus. We know that global supply is falling. For 4 consecutive years, supply has fallen. And it's primarily because mine production is falling. We recorded our 4th consecutive year of falling production. This chart simply shows how each country did. And if you recall, Mexico and Peru are the 2 largest silver producing countries. And look, last year, both of them had big down years in terms of silver production, which is what drove total supply lower. Industrial demand, however, remained relatively unchanged and close to its record high, led by a very solid performance from electronics, by photovoltaic demand being again close to its record high. And this is now a forecast plus a looking back chart on vehicle uptake of silver. Last year, 55 million ounces of silver went into conventional cars for all the electronic circuitry. But if you believe any of the forecasts for electric vehicles and hybrid electric vehicles, such as indicated by this chart, clearly there's going to be at least a doubling in the next 10 years and almost a tripling of silver offtake for electric vehicles just in the next 20 years. So EVs truly are the next disruptive technology for silver. Let's not neglect the investors. We thought they'd gone and hidden for several years in the bear market, but look, starting in August of last year, the silver ETFs all of a sudden popped up with money inflows, allowing them to bring more silver under management. And if you look at bar and coin demand, here's the main anomaly. The reason why silver got trapped in a bear market for so long is that the bar and coin demand almost disappeared in the US and certainly diminished in India and China. But there were signs, very good signs, in the first quarter of this year with US coin and bar demand up 4 times higher than the previous year in the first quarter. So it looks like not only Main Street, but Wall Street is coming back to silver finally. Now, that crash in US Eagle sales caused a jump in COMEX inventories, silver inventories in the US. And you can see it clearly here with the sales in the blue bars and the COMEX inventories in the red line. And again, that's why we got trapped in a bear market for so long. And as a result, we had a relatively balanced supply-demand scenario, except for the absence of investors, and that's what caused the surplus to build. But the surplus is now shrinking rapidly. The forecast for 2020 is barely 26 million ounces of surplus, almost nothing in a billion-ounce market. So I think as the surplus climbs to 0 and then goes negative into deficit, possibly even next year, that's also a driver on the silver price. So, will history repeat itself? This chart simply shows the performance of the S&P 500 through the 2006-2012 period and the performance of gold relative to the S&P. Gold was a significant underperformer during the boom of the equities, and then for years after the crash in 2008, it was a significant outperformer. Will history repeat itself? I think yes. Thank you.
Wow, that was straight on the point. Thank you very much, Brad. I have a question for you. Do you know already, with the e-mobility and the plug-in vehicles and the hybrids, is it possible to recycle the silver out of those cars?
It's possible, but not economically feasible, because a conventional car only uses about 1 ounce of silver. So would you scrap an entire car for 1 ounce of silver? Even
Nope.
if you pulled all the electric circuits and circuit boards, would you still scrap them for 1 ounce of silver? An EV uses twice as much silver. So I think the short answer is no. I think that silver's gone.
But that would mean then within the next 10 years, when we sell all those e-cars and plug-ins, that silver is stored away and is never coming back to the market.
That's true for almost all industrial usage, and that's what's really different about silver versus gold.
Fantastic. And you said by 2021, you think you expect a deficit in the silver market. Do you have already an idea how large a deficit might be and what might be an impact? Because I have the feeling already that, yeah, let's say the production is shrinking on the one hand. On the other hand, we have all those new usages like in solar panels, like on e-cars, etc. But still the silver price is not moving.
The silver price actually was moving up until the crash in March, and it hasn't recovered yet from the crash due to the economic slowdown. These are temporary things. And as you observed, the surplus has been falling now for 4 years, and I forecast next year it'll be 0 or negative, in other words, deficit. Not a big deficit, but I can see the trend. And if that trend simply continues, that will surely allow the price to rise.
Definitely. And do you have already an idea where the price could move?
Well, you go to the charts to get an idea of targets and resistance points and support points. And to be honest, there's some modest resistance around 19 or 20, but the main resistance is 23 to 24. So I think as the economy rebounds this year and gold continues its secular bull market, silver will break out of this $15 to $16 range. It will test the $19 to $20 range this year, and I'm forecasting that we'll see north of $20, testing $24 in 2021.
Fantastic. Super. Well, Brad, thank you very much. It was a great presentation, great insight into the silver market. And yeah, hope to see you soon and all the best, of course. And I would say keep it going with a higher silver price.
Thanks, Jürgen.
Super, thank you very much. Ja, meine Damen und Herren, das war Bradford Cooke, der Vizepräsident des Silver Instituts und auch gleichzeitig CEO von Endeavour Silver. Und Sie haben es gehört, Silber steht wohl ja in den Startlöchern, würde ich jetzt mal sagen, um dem Gold zu folgen im Preisanstieg. Wir gehen in Defizite für nächstes Jahr bereits. Das Silberinstitut sieht das bereits hier, dass man also wirklich runterkommt und ins Defizit geht. Und es war schon immer so in Defizitmärkten, dass die Silberpreise, Schrägstrich die Metallpreise, dann einfach auch ins Laufen kommen. Gute Nachrichten für die Produzenten, wie zum Beispiel Endeavour Silver. Und von dem her schauen Sie sich in Ruhe an. Vielen herzlichen Dank fürs Zuschauen. Das war Bradford Cooke vom Silberinstitut für die 7. Deutsche Rohstoffnacht. Alles Gute, bleiben Sie gesund und auf Wiederschauen. Brad, thank you very much. All the best for you.
Thank you.
Thank you.